Gonna run through the futures numbers real quick here. I know it's super early to hit this, but I've got a dentist appointment, so I've got to get trucking here in just a second. So let's run through what we're looking at for futures. It's not super exciting right now because today everything's all mixed up. Well, not really mixed up, but anyway, you'll see what I'm talking about here in a second. So let's go over here real quickly and see what's happening. We do have some news this week, by the way. Today we've got the ADP non-farm employment report coming out, which is the precursor to non-farm payroll. That happened about 5 minutes ago. I haven't looked to see what the outcome is. I'm more interested. I'm less interested in what the outcome is and more interested in what happens when the market opens and see how that is digested by the greater part of the market. But Friday is non-farm payroll, and that's got the unemployment numbers as well as the new employment numbers and a few other reports that are coming out with it. It's a pretty heavily traded day, so we're going to really be cautious on Friday. But for now, let's go ahead and just see what's happening here. Futures, looking at the S&P here on the left-hand side, we're still in a mixed area here, just kind of hovering right around this 3,700. You know, the 4-hour trend, the 4-hour bias is long, but the 30-minute bias is short. So we've got mixed bias here on the S&P. That's mixed bias is telling us just stay on the sidelines. Don't get over antsy. Don't try to force a trade. Let's just let the market figure out what it's going to do. If it starts to turn down, we'll wait until the 4-hour bias confirms that move short, and then we'll start looking for short trades. If it moves back up, we'll wait for that 30-minute bias to flip back over and be into the long direction, and where both the 4-hour and the 30-minute are in agreement. You know, we just want to wait until our biases are in alignment with one another so that we can trade in the direction of that confirmed trend, right? That's all we're looking for. So right now, no confirmed trend. Crude is still in a long bias. The 4 hours long, 30 minutes long. Yesterday we talked about looking for long trades. Unfortunately, it never pulled back. it just, took off yesterday and just kept on trucking without us. So we would still be looking for long trading opportunities here. Kind of what's been occurring up to this point is that perfect textbook pullback we're looking for, where we're making lower highs and lower lows and then playing a breakout off of that previously closed lower high. I'd rather do this though during a little more heavily traded hours. So for crude, we're still going to be in a holding pattern until we get during regular hours that pullback. We'd like to see continued lower high, lower low, and then play a breakout on the, as it breaks through the top of that previously closed lower high. Of course, whatever time frame you have your indicator set to is when it's going to start giving you these red or green arrows telling us that we've got conditions that might be meeting our setup for buying or selling, right? Over on gold is, took a big pullback here just about an hour or so ago. And, here we sit with gold, right now down around 1940 area, 1939. For gold, we're still in a long bias. The 4 hours long, the 30-minute is long as well. We'd want to see a pullback and then a break of that previously closed lower high. Yesterday, we had a couple of pullbacks like that. Just never got that good traction to push that higher for us. We did have a lower high, lower low, lower high, lower low. It broke it, just barely broke above it, and then ended up, 2 candles later stopping us out. Still would have been a lower loss than what we had expected, what we had planned for, but nonetheless, would have had a loss here. That second signal, lower high, lower low, would have taken us in here and then would have closed us out for a tiny, for a little bit of a win. So would have gotten back part of what that loss was, but certainly didn't have that nice continuing trend that we hope to be part of. Today, we'll see if it continues to give us that opportunity where we get a little bit of a pullback, lower high, lower low, and then we play a breakout of that previously closed lower high. So that's what we're looking at for the day over in crude. Again, like I mentioned yesterday, the most important thing of what we're doing is consistency. So, if the market conditions aren't there, don't force the trade. We're 6 days into the new session. We're, depending on when you started, 2 or 3 days into your new trading year. You don't have to force it, right? don't force a trade. If you do anything in 2021, make it the year that you don't force trades, that you wait for your trading plan to actually plan out. A, you maybe miss the year that you actually have a trading plan, and then B, it's the year that you actually follow that plan. So anyway, that's it. I'm gonna wrap it up here. Gotta run to the dentist.